Very good evening, everyone. This is Rajendra here joining from Market Calls and welcome everyone to live training session on mini certification course on trading Nifty and Bank Nifty using market profile. So we are in the second session here. In the previous session, we had discussed about a lot of basic concepts about market profile, how to observe the market profile. If you are watching market profile for the very first time, what you can learn from the structure is what we had learned in the previous session. Now, in today's session, what we are going to discuss here is we are going to discuss various things about the market opening. When the market is opening, what I should focus, particularly the opening structure and the importance of the opening auction. And we're going to discuss very detail about different opening types and market confidence. And of course, small discussion on market profile versus volume profile, which one should use, and Nifty and Bank Nifty current market structure explained. Since a lot of interesting things are happening in Nifty and Bank Nifty current market structure, I'm going to kickstart with the current structure, so to give a fair idea what happened in Nifty and then how the top itself formed in Nifty. That is what I'm going to explain. So before getting into the session, just give me a quick confirmation about the audio and video quality so that we can quickly kickstart with the session. I hope the audio and video quality is good enough. So there is a chat box around there. You can just give a confirmation. If it is clear, you can just type clear. All right, great. Thank you, Chirag, Balamurgan, Deepak, and everybody. So without any further delay, we'll start with Nifty. So here is the Nifty structure. Let me pull up the Nifty structure here. You know, right? We've been talking about this last week, about this low volume activity. I said I'm not comfortable particularly with this low volume activity. A good auction, it starts with good volume. And obviously it ends up with the ultra thin volume. So the volume started thinning out, and that is where the price also struggling to keep going up. Even though the price action went a little bit up, nothing has been changed in the context. The context was like throughout the week, last week, market rotated and rotated and rotated and rotated. Throughout the markets, rotated with a low volume activity. Volume was dry, totally dull, boring, balancing markets, struggling to go up. It was still going up, but it was struggling to go up. Then we also had a very important reference. There was an AB poor high was there, that one of the AB poor high touched and then it rejected. So twice it touched and then rejected, touched and then rejected. When it is touching and rejecting, it had formed on various important things, like it formed a strong ORR, one of the way a market top out, price open with an kind of a gap up. It started with a gap up here, right? It started with an gap up and then it dropped. It does a lot of distribution and finally late drop is what it happened. It turns out to be a genuine spike. Such kind of genuine spike is also one form of an top formation, another form of a top formation. Now on 18th Jan, the top formation got confirmed. Now I'm going to show you on 19th of Jan, what was my actual analysis? What was my actual analysis? So I want to pull up one of the video from the Traders Cafe. Let me go and pull up the video from the Traders Cafe over here. I'm going to go to Traders Cafe. So Traders Cafe, right now we are in 3rd edition. 4th edition is going to start from upcoming Tradezilla onwards. So here I'll go to the 18th of Jan, right? So probably I'll try to get an 18th of Jan recorded version. This is 18th. Do we have a morning session? Give me a second. Here is 18th. Yeah. It's the 18th one. So I'm going to replay the action over here. This is Rajendra here joining from Market Calls, and welcome everyone to live training session on market profile and order flow. Now we've been seeing some opening liquidation. Price opened casually and then it's doing an opening liquidation. Is this liquidation is going to be a powerful one? That is the question. If at all, if it is going to be a powerful one, how much down move we can anticipate, which is a reasonable one to understand from the downside perspective. If you remember, we talked about one of the important reference level. The important reference level is like, maybe I'll do one thing. I'll switch back the workspace. I'll close the US market and then I'll try to bring on the Indian markets. So the chart, what you're watching here is the 15-minute time frame chart. It's a very important chart. Like once in a while, right? This kind of a trend following system goes for a crazy uptrend for a longer period. So it's been going on in an uptrend probably for, if you could notice, like it has been, so since 27th onwards, it's been in an uptrend. Almost 20 plus calendar days has been gone without any sell signal. So maybe if at all any correction is coming in, maybe we might be seeing a sell signal probably around 18,100 kind of levels. Like that is a probable place to look for a potential sell signal around those levels. That is what, if at all anything is happening, probably it could be a bit imminent. And let's go and check from the profile perspective. What are those important reference level that we need to look around? So it's a straight liquidation. You know that undoubtedly it is a great liquidation. Kind of an, is it a breakout failure? Maybe it could be a kind of a breakout failure also, but day low is a VPOR low. Notice that. Very interesting one. Last 4 days, we've been seeing a low volume uptrend. Last 4 trading sessions. Without any inventory adjustment, the price action, absolutely no inventory adjustment throughout the phase. There is one place where there was an VPOR high and then inventory adjustment happened in the form of gap down, and that's it. The inventory correction started happening. Once again, price got back to the normal levels. Now, from the order flow perspective, what we could see here is like we got a cluster. Cluster got broken down on the big downside on the down. I mean, cluster got broken down, which is not a good indication. The two cluster got broken down with a big delta, 2,275. Probably that could be an indication of an unwinding. So unwinding, probably it is starting today, and maybe let's see how far it could extend. As I said, it could extend as good as like 1800 kind of levels, maybe even a little bit down below that also, it can happen. So here is the cluster. This is a slightly and very thin cluster. That was the opening comment on that particular day. So this is like when the price is opening, right? What exactly I'm just watching? I'm just watching order flow. I'm just opening where the price action is opening. So I was seeing an breakout failure, right? I'm just seeing a breakout failure. I'm seeing a volume cluster. After a volume cluster, I'm seeing a liquidation. So a lot more things we may have to watch through the open. Does previous day's price action plays a major role? If you ask me, yes, undoubtedly, yes, it plays a very, very major role. I want to show you on 19th. 19th, I'm going to show, let me pull up the 19th data as well. So I'm going to pull up 19th morning session. Okay. If I go to 19th morning session, I'm going to show you the very next day, once the top has been confirmed, I'm going to show you what was my opening analysis. Morning everyone, this is Rajendra here joining from Market Calls, and welcome everyone to live training session on market profile and order flow. We've been looking through the 19th Jan session here. So price opened and then it started it went into the previous day range, very quickly rejected, and it started getting back. And very interesting to talk about Orderflow, because Orderflow is having a very big cluster, and that cluster, if at all, if it's going to get broken, more huge downside selling could be anticipated, because such a huge positioning is what it happened over here. The positioning is a sizable one, right? So to this, it's a sizable positioning. So more the positioning is going to get broken, higher the odds of further accelerated sell-off. The most important part that we need to consider here is, like, yesterday, the market had formed a late spike, right? So late spike, you remember, right? Very few spikes are genuine spike. Last week, I mean, we talked about in the market profile sessions, right? Whenever after a major swing high, we are seeing any spike on the downside, it is most likely to be a genuine spike. Genuine spike. And not only that, price open gap up and totally reverses. Point of control migrated. Value area comparatively plunged compared to the previous day's value area. So that points to a stronger ORR, spike down at major swing high. Everything points to a potential top in Nifty, right? So usually I don't call a top or something, but whatever happened is yesterday, it is more of a strong ORR. Kind of an extended low volume uptrend. You can see that low volume uptrend has been there, right? From here, it's been there. So low volume uptrend, all these places, right? I have to keep on calling a low volume uptrend on almost every places. At least these top 4 volume are like low volume uptrend. Signatures of buyers are not in a, I mean, the buyers are there. Option was still going up, but somehow the higher prices are not enthusiastic by the thing. Morning, we had seen a liquidation in yesterday's case. Right? Morning, we had seen a liquidation in yesterday's case. In fact, at this word, right, I have to give up my shorts yesterday, and then price went back up. But then later on, once the price started falling down, I have to take an re-entry into the shorts. Now, the odds are like positional shorting odds over here. I'm talking about probably testing of the current month low. Yesterday, I also posted in the Slack community as well. So all those weaker references, all those weaker point of controls are likely the potential targets. So even this is one of the visual targets over here. So all those things are likely to be smashed down like a Hulk. Like that is what the markets are likely to do. When such kind of top, last time it happened when Jan 2020 coronavirus crisis started. Exactly, we started with a strong ORR. This is the second time we are seeing this kind of pattern. I don't know how much downside is left this time, but definitely it is a potential top formation. And talking about INFI, you see that the INFI, what we call this AB poor low. All right, so that is what I had anticipated. In fact, my expectation itself, I'll tell you where we talked about that. So when that topic happened, when the top happened in Nifty, like in the form of a strong ORR, right? So the strong ORR got confirmed in the same day itself, probably late evening around 3 o'clock. We know that it's going to be, turns out to be kind of a spike. And it was a very interesting trade setups though. We don't get such kind of trade setup very often, but whenever it is happening, right? So one should able to understand the nuances behind that. So basically, so it is almost my confirmation, right? Around 3.5 is where the confirmation, strong ORR in NF, maybe a top formation in NF. So the spike down from the top is a genuine spike in many aspects, as the day is turning to be a stronger ORR with a POC migration in place. And then here comes my thing after market hours, right? I said like it's a strong ORR with a spike down. That's what the post itself all about. And then I said like by any means, it is a top formation in NF. NF means Nifty futures. And current month low, which is at 17,410, could be a potential positional short-term target in NF. So by the time, right, Nifty was trading around 1,815. Like usually I don't go for a bigger targets, but when such kind of patterns we are witnessing a very stronger patterns, one can go for an high confident, such kind of an bigger price action, right? So such kind of bigger price actions are always a possibility. You know what happened in the markets last couple of days? Markets are getting into a directional price action, particularly Nifty, right? On a daily basis, Nifty is tanking by 1%, 0.8%, and then 0.9%, another 1% as on last Friday. Like, and then we've been nearing, to some extent, we've been nearing that 17,410. As on last Friday, we have what? Yesterday's closing. SGX Nifty is getting very close to that reference level, 17,451. We don't know whether this will happen or not, but next is coming series. I mean, before this month is gonna closed, monthly expiry is gonna get closed. I'm expecting at least one time a touch of an current month low is what I'm expecting over here. So what is the reason behind that? Why I'm expecting the top is formed? Why I'm expecting a sudden fierce drive towards the day low? A lot of reasons behind that. One of the primary reasons is like, if you could go back and see the monthly structure. The monthly structure just one day before that was a weaker one. So let me go back to the monthly structure. Here's the monthly structure. 3rd of Jan is what we started the month. It was a trend day. If I go back a little, and what I'm showing you is a January contract. So if I zoom it out, you can see that 28th December low and 30th December low. You can see that it's precisely same. Now, such kind of visual reference level when it is there, right? So obviously, one of the reference level, the 17,410 is always an important reference. In a worst case, 17,200 could be the next level of worst case target. But what we can anticipate in the current series, couple of interesting observation I had on last Friday. What I had seen is like, there are two things I had seen over here. Some buyers, they onboarded, that actually some 10,000 plus lots of smart buyers they onboarded. One in the B period section they onboarded. And then they had onboarded in the late rally. Again, so some 5,000 plus lots got onboarded over here. 5,000 plus lots, not number of shares, 5,000 plus lots. Again, second half also at the L period. L period when the price was spiking down and it's rallied back up. So again, I was seeing some 5,000 plus lots of smart buyers over there. So twice some smart money got onboarded over here. Onboarded and then they're holding up. Yes, global markets are looking weaker. You know, last Friday, right? The US market sentiment totally ended negative. Almost, if you're looking into that global markets, it's totally ended negative, almost 1.89%. Total damage has been done in US market. The US markets itself, right? Almost they came back. It's been crashing one way. If I look into the dollar SPX, you could see that they've been crashing one way. It's been one way crash. Extreme selling pressure. Whether they bounce back or not, we need to check it out. But it's been an extreme selling pressure odds has been there. At least US markets, compared to US market, Indian markets are still far better. Indian markets, Nifty is very much far better, at least in terms, still we've been trading comfortably above the 50-day moving average. And when it comes to volatility also, right, volatility is one thing we always watch on a daily basis. End of the market closing basis, we'll look into that. Indian market volatility is far better comparatively. Still, there is not much of fear is there. There is a mild pop-up above 18.89. That too, it happened on last Friday only. Whereas US markets, if you are looking into the volatility, the fear is at the extreme. So when the fear is at the extreme, in the sense they are at 28.85 kind of levels. So what does that mean? Will it break Indian markets also? I don't think so. I don't think so, because US market is showing extraordinary fear. As of now, Indian markets are not showing any fear. Okay. That doesn't mean like markets are not bottomed out also. So we are come somewhere in between. Like we are not too bullish, we are not too bearish. That's the kind of thing we've been watching around. And in fact, last Friday, there is also a smart positioning. Despite the smart positioning, yeah, of course, if you look into the numbers of Reliance or ICICI Bank numbers, ICICI also has posted a very great numbers. Reliance also had posted a great numbers. So only Monday morning only we'll get to know that what is going to happen, whether the smart positioning buyers are going to win or not. If this panic, generally that whenever there is a panic or greed is there, usually it gets spilled into the Monday's trading session, usually. But if it is not getting spilled, that is maybe that could be bringing in some short-term rally back in the markets. If it is not getting spilled, that means if Monday is not going to be a gap down, maybe that could be a sense of bullishness. If Monday, if the price action is going to go hold this zone, because this is a zone I had witnessed a smart money buying coming in this band. If this band is going to maintain on Monday without any gap up, or even if there is a gap down is happening, if there's a gap down is happening or prices again getting pulled back in, maybe that could be a sense of bullishness, a temporary bullishness at least, towards something like 17,800. Also remember, next week we are going to have a limited days for expiry, because one of the days is going to be a Republic holiday. So obviously we are going to have only 3 more sessions left for the monthly expiry. And then last Friday, I also watched a breakout failure. Maybe I'll show you what was my analysis on 21st of Jan. 21st of Jan, when markets are doing something crazy, let me show you what I was doing. Okay, what was my view on 21st opening? Because opening is something we always able to understand something very important informations. So I'll go back and then I'll show you the opening of 21st Jan. So let me pull up 21st Jan here. Yeah. 21st Jan. So this I'm going to show the opening of the 21st Jan here. I was facing some data issues initially, but then got fixed. Do some sort of an all right, so exhaustion, a gap down open so far. And then what else we are seeing from the Ninja. Let's go to Ninja here. Stopping. Let me also put up the US market charts as well. Probably after a long time, after 102 temporary uptrend or some sort of like that. So definitely this is like kind of an extreme of the extreme. So I would prefer not to short here, definitely. Evening, morning also having a dilemma whether to go with the short or not to go with the short. So I said, like, unless I'm not going to see the tools, I'm not going to do anything stupid. Here we are. What do we see here? A gap down open, price went down, kind of a drive down. Is it really a strong drive? That is what the answers we will be able to get from Orderflow. What we're able to see from here is like a lot of zeros. All these zeros are likely to be the target. So 1680 up to 17680 plus. Yes, we can anticipate. Cluster got broken. Remember this. This is something, a very serious cluster. Kind of an whenever these kind of clusters are getting broken, all these things will be considered as a buyer's commitment. Right. So look at the clusters here. Massive clusters. All those clusters is getting broken. Yes, it is getting broken. So absolutely, it is going to be a bullish day. So attempting to short, it's going to kill the, maybe it could be going to kill the traders. Because this thing, it should not get broken, but it got broken. It got broken with a big delta also. So the focus itself will be likely to be on the long side. Maybe I'll also looking for an intraday long in that case. So what level I can anticipate. Generally, I can think of like 5-minute time frame getting into a buy mode, something like 17,927 sort of could be a likely odds. That is way far, but still 17,700 call option. I prefer to buy it. So yeah, I'm just stepping into longs here. And here is again, it's out of exhaustion. That is something very important. Maybe right, this sell signal which has been running, that could, if at all it has to come to an end, maybe we could be seeing some price move towards 17,800 kind of odds. One of the very early clues like getting back into the range, previous day range. All these zeros got a clearance. This breaking this cluster, look at the volume of the cluster. I would like to show you the volume of the cluster here. You know, right, this kind of positioning is a very strong positioning. Despite the strong positioning, the price action is totally shaking out. Look at that 3,025. That is a very strong positioning over here. So definitely, it's not a small numbers to speak as such. It's going to be a very big number to speak. So it is going to be a long opportunity. And price also breaking that cluster. Very first scalp trade is done. The first trade which I had done here. So I took around 949 and then 951 I'm out. I'll be looking for some more down move, and then every down move I will try to look for a long opportunity. One of the things that I personally practice here is like sometimes I don't give a commitment at all. Sometimes I love to give commitments. Sometimes I don't like to give commitments. Whenever there is a lot of inner fear is there, I'll try to enter, quick move, exit, enter, quick move, exit. I'll be breaking down the trades into multiple pieces and then I'll start trading that way. That is my own style, right? So it's up to you how you want to specify yourself, because I always figure out that market is always a two auction process. Market always gives one more opportunity to come back and trade it. Right? I'll again monitor, and again I'm comfortable with that. I'm seeing a sort of momentum coming in. I'll try to join the momentum, exit, and then trade. So that is why I split the trade into multiple trades throughout the day. So what happened this far? So some decent push. Look at that price getting into the range. It was weaker, so pull back. Once again, it's time to go for a buy here. So what I have to do? So go and buy again. All right. So day high is weaker, to be very precise. Look for a move again, and then look for an exit. So move in your favor. A quick move in your favor is always something what you need. All we're going to have to do here is a square off, right? And then look for one more down move. If you're getting it, keep playing it repeatedly over and over again. So that is with the morning view. Like, let me show you in the afternoon what I was doing, right? Afternoon is totally, the perception has been changed because market was doing something different. Let me tell you what something different it was. Probably it was very interesting one also. Kind of a breakout failure is what it happened. Probably I'm going to show you the afternoon one, and then we're going to get into the regular learning. Today we're going to talk about kind of a very interesting one, market confidence, which I do use personally in my daily trades. Very good afternoon, everyone. This is Rajendra here, joining from Market Calls, and welcome everyone to live training session on market profile and order flow. So what we had seen is like kind of a breakout failure is what we are seeing right now. Price broken the day high. Day high was weaker, right? Day high broken, and then it straight away started liquidating on the downside. This is more of a liquidation, right? So first step is like when this kind of liquidation started, you're able to sense that there is a breakout failure, and probably the center point is one of the very important reference. Center point, the price manages to come back to the center, right? So what I had done, right? I thought like maybe I should step away from the game. Since the morning, I've been working on the call side, but then I thought like maybe this down move I could consider capturing those things also. So once again, I done some little bit of scalping around those levels. So morning, it's mostly Cs. You know that right from the morning, we've been bullish about the market. But then after seeing the breakout failure, I have to take some quick PE side trades. And the PE side trades also done. Price rotated back to the center. And that is the first thing that I targeted. Maybe at the K period, maybe if at all, sometimes, right, the day low test will be the possibility with a breakout failure in place. So first is always towards the center point. Center point is done. Now next is like maybe towards, if at all I period is breaking down, one more liquidation maybe we can anticipate. So I'll be waiting for the I period or one more sort of liquidation to happen to look into further shorting opportunities. Most likely second half is overall what happened is like price action balanced. Despite everything, one positive thing happened today here. Big volume clusters, a huge volume cluster, and smart delta positioning by the buyers. These are the two things we are seeing. Still, price is trading in that range only, right? So, but despite that, what is not good right now is, right? It is doing what? It is doing more of a, what we can say this. This is more of an breakout failure. Breakout failure usually will have day low testing odds. Sometimes the liquidation could go as crazy as possible. But it's a Friday, so for momentum, trade the momentum. That's been the game. So still, the market is not out of bearishness yet. Whatever right now the I period is doing is definitely not right. It is having a liquidation odds. Probably sometimes IJ, that itself more than enough to break down those structures. But remember, Friday is all about jittery. What they could do here is even after testing the day low, once again they could bounce back again. They could do this kind of things also. So Friday is very, very uncertain. So better don't try to give. I mean, I prefer not to give any commitment to any of the positions. All right. Total number of trades went to like 47 trades in a day. Mostly working on the P's mostly. Very closer, but then they are stepping away. But so price is further not elongating much. Maybe it's okay to take a pass and then go back neutral, and then it's okay to miss an day low test. That is how I'm just gonna do. So I'm gonna log off from my PC and no more trading. It's been already done. Like 50 is like itself and kind of over trading only. Typically 30, 35 is a decent range for me. But something like going beyond 50, it's like kind of an addictive thing. So step away. It's okay even if I'm gonna miss a crazy fall from here. Also, I'm okay with that. Let me stop the session here, and yeah. So that is how the day went. Like continuously, we've been having an changing opinions throughout the day. I was having in first half I was trading bullish, and second half I was witnessing a breakout failure, and then I had to trade it towards that level. I was traded up to like 17,580 kind of levels, and then I missed it. But I know this kind of crazy, as I said, Friday is all about craziness, right? So Friday is kind of jitteriness, or sometimes the price does a spike and then it comes back to the center. That's all habit of Fridays. So Friday you can see this kind of jitteriness, particularly on the downside on such kind of a bearish day. It's totally a possible one. So which is what I'm explaining. So I thought like I should step away from the game, because that kind of craziness last 1 hour, we can see that kind of craziness. It will be putting like, oh my God, what a move. Like that is the kind of things which generally happens. But then I switched off from my system by around 2:30, and then I got back after 3:30 only. And then I seen that like crazy volatility happened, and then a day low test also happened over here. In fact, a similar day low test is what I was also expecting in Bank Nifty also. Bank Nifty had done something very peculiar about that. What is so important about here is like you can see that the structure, how precisely the structure happened over here. Now this says something very important thing is these kind of structures are not good structures. The lows are not good, particularly it's a weaker low also, it's a poor visual poor low also. So such kind of structure usually it will be broken down very faster. Maximum in 1 or 2 3 days it will be broken. But then this structure is definitely not a good structure over here. What happened in Bank Nifty? At least Nifty had done a decent structure, but Bank Nifty, the structure is weaker, at least. So I'm not convinced with the Bank Nifty structure here. Though Bank Nifty price manages to pull back, and in fact, it even went way far to get into the previous day's range. The structure is not a great one to witness. Usually, this kind of things will have a gap down, maybe price breaking and then taking those lows. At the opening itself, we may see some drop on the down move. Could be a possibility in this case. This kind of structures are definitely not so good structures. So coming back to the topic, right? So today's topic, right? We're going to talk about what? Trading around the open. Now, first thing that whenever the price is opening, what I'll be watching here is I'll be checking where the price is opening relative to the previous day's range. Is it opening inside the balance or outside the balance? Is it opening inside the previous day's range, or it is opening like a gap up or gap down kind of situation? Am I witnessing any momentum drives? If the price is doing a momentum, is it a good momentum or not? Now, one of the day, if you remember, let me show you one of the day here. So one of the day here in Nifty, I was watching a momentum trade. This is a day precisely. Notice the price open on 19th of Jan. Price opened lower. It entered into the previous day range. Couple of ticks. Let me count the ticks for you. 1, 2, 3, 4, 5. Total 5 TPO is what entered into the previous day range. It rejected. That rejection itself and very interesting sign. Price penetrates through the open, and after that, price never revisited the open, not even a single time. Now, such kind of days usually will have a very good trending odds. right? Such kind of day, you can see some decent trending price action. In fact, I took a shot around that level itself. I took a PEs and then I done some decent trades around that level. So price taking an opening is where? Opening is outside the previous day's range. It is in an imbalance mode. Imbalance mode very often have trending possibilities. Not only that, price getting into the range, rejecting. Price getting into the range and then rejecting the previous day's low. And then a straight drive. So those are very conclusive information that we are seeing momentum traders in the markets. Momentum traders, whenever the momentum traders are pushing really hard, they will not allow the price to once again come back through the open. However, if it is something like some other casual day, if the price is opening, let's say the price is opening, here is where the price opened. It drives immediately down, but quickly they get back through the open. Again, they'll get back through the open. They'll get back through the open. You know that these kind of days are likely to be a balancing days. More the price is touching the open repeatedly. Sometimes, right, you would have seen that price opened. It would have went nothing much, but a little bit up. Again, it went a little bit down. Again, it goes through the open. Again, it comes back. Go through the open, comes back. Now, these kind of days are not confident days. So we can call that as a no confidence day. No confidence day. In a high confidence day, how it looks like? A high confidence day looks like when the price is opened. Price opens over here. Probably it goes up and maybe only one rejection, only max to max we'll be seeing, but never it would have been where it want to come back again. It would have been dragging down throughout the day, or it been going up throughout the day. So trying to analyze the open itself from a trading perspective, it could give a lot of confidence in your trading setups. All one have to do is sit and listen through the open. So opening trade alone is not a big deal, but how to take an opening view is something very, very important for a trader, particularly if you are an intraday trader or a very, very short-term trader. You're going to see a big gap down market or a gap up markets. Our price is going to open inside a range. How do you see the information? Right, so I do mostly a combination of market profile and order flow. Generally, I use order flow for various tools like to understand positioning, clustering, or if there's any trapped activity is there or not. That sort of analysis purpose, I'll be using order flow. And many a times order flow gives more minute details. Whether the momentum which is generating is a serious momentum or not. Like last Friday, I haven't seen any serious momentum. Even the positioning was there, the positioning got broken last Friday. And that is what it makes me to look for a longer opportunity. Last Friday, if you see through the open, what happened? Multiple times, price was oscillating back and forth around the open. Letter A, price went up, it dropped down. It was keep going down. Once again, it got back up. B period and penetrated through the open. Again, it penetrated back through the open. Maybe if you're watching from the candlestick charts, I'll show you how it looks like. I'll take a 5-minute time frame. Okay. So here is the open. I'll draw a line around the open. You can see that. So price went through that, got down, again went through that, again got down, again went through that, again got down, again went through that. So multiple times it is touching over here. That itself an indication that more and more rotational odds are likely to happen through the open. You want to have to understand those concepts very clearly. This is not a momentum market. This is more of a high chances of a balanced markets. Balanced market means market could repeatedly center around. Last week, we clearly seen that, right? What is the importance of the balanced markets? So this is something which is very, very interesting market. In fact, last time, 10 times last Friday, despite the huge volatility in the markets, Nifty futures had rotated almost, how many times? Almost 10 times it had rotated. 10 times the market rotating, which is indicating that short-term players' presence is there in the markets. Now, what the short-term traders had done, that is something we need to watch from the order flow perspective. Probably from the order flow, I'm seeing like cumulative delta is positive. Obviously, short-term traders will be always on the opposite side of cumulative delta. That is like 2,351 selling is there on the opposite side. So we can say like short-term traders, though there is a smart delta positioning is there, short-term traders who are mostly passive traders, they carry forwarded shorts. Short-term traders who are passive traders or market makers, wholesale traders, they have various meaning. They carried shorts for the weekend. That's what we can able to grab from the cumulative delta from the order flow here. However, positioning was there. Positioning was there from the delta. So everything put together, we can only come to a conclusion that if at all that gap down, so live SX Nifty is indicating a gap down, right? If at all that gap down is not materializing, maybe that is a bullish odds to look for an instant long opportunity. But if this gap down is going to get materialized, maybe we have to think differently. Maybe it could be a buying at a lower levels or something, or we have to look through the opening volume and then we have to decide, because price is going to, if at all this is going to happen on Monday market is going to open in an imbalance mode, kind of a gap down mode. When the price is opening gap down, right? If it's an emotional, if it is mostly because of an emotional tensions in the US market or something, and generally price started rising back up, it is totally a bullish odds. If it start rising, maybe the gap could have been got closed. Even the price action of prominent point of control maybe also get tagged in on if at all 17,620 could be one of the important reference level to watch out on the upper side. However, price opens, but still it started further dragging down. That could be totally dangerous on Monday. Because the sentiment is still getting carry forward across the globe. Sentiments are not good. Only positive thing is like the VIX is what the only positive thing. India VIX is still around 18 plus. We are not seeing any big crashes yet. And moreover, we are also having an event in place. Events like RBI policy announcement next month, it is happening. And then the most important one, the budget announcement is happening. Within a week's of time, budget is planned. So most of the traders' eyes will be turning towards the budget nearing. Since the budget is nearing, a lot of economic announcements will be happening. A lot of media channels will be start talking about it. So already markets has been seeing the highest speculation, because one of the crazy month where we are seeing repeated breakout failures. This kind of breakout failure is something which is not only happened on last Friday. It's been continuously happening. I think this is the 5th or 6th breakout failure in Nifty alone. Nifty alone 5 breakout failures. Bank Nifty alone another 5 breakout failures. So one of the most speculative month I had seen. So this is my view. Like whenever such kind of more breakout failures are happening, I would consider that the sentiment is like too much of people are coming and betting in the markets. They are speculating, and it's not like very same markets. It's been in highly speculative markets is what I do consider like that. Yeah, so far, this is something we need to look out for. Like when the price action itself repeatedly coming through the open, that says how many times it came through the open. Letter A once, letter B twice, G period again twice, H period once, I period twice, J period twice. Like many times it had traded through the open. We know that this kind of markets are not momentum markets. They are rotational markets. So you should learn as a trader, you should learn how our rotational trading looks like when the price action is opening through the open, price is going through the open in multiple times, and how imbalanced markets will look like. That's one of the practice a trader has to do. All right. If the price rotating back through the open multiple times, those are signatures that there is a very high odds that this day could be turning into a balancing day. You should learn to check where the balancing itself could have happened. Of course, what we are going to talk about is a very important concept. It's called market confidence. Market confidence itself a framework to understand how the market as a crowd it is doing. Is the buyers are doing a good job or the sellers are doing a good job? It is more of a real-time sentiment, means that we don't do any post-mortem analysis here. It's more of a real-time analysis. Whenever this is live interpretation, more of every half an hour we'll be doing a market confidence like measure. These days I do it in my heads. Sometime back I do it in my Excel sheets. So if you're a beginner out there, one can consider doing it in the Excel sheet. So it's kind of a real-time sentiment to understand the crowd psychology via market profile structure. It helps narrow down the traders to focus on the quality of the trade setups rather than tired of a noisy trading environment. This market confidence is something which is missing in most of the technical analysis tools. But once you're getting into that, your number of trades will get into the control, right? So types of market confidence, we can classify the market confidence into 5 categories. This is not textbook style. This is mostly from my own experience. I've been observing market profile since 2012 onwards, market profile and order flow. So according to my opening confidence, I classify into 5 types. One is high buyer confidence, means serious buyers are in control, and high seller confidence, serious sellers are in control. And then low buyer confidence, means buyers showed up, but they are not serious. Low seller confidence, sellers showed up, but they are not serious. And then no confidence, neither buyers are confident, not sellers are confident. That's what it means. So if you want to understand the market confidence, you need to understand 4 major parameters from an intraday perspective. Number 1, the concept of initial auction. Remember the term initial auction. It is not initial balance. It is initial auction direction. It is more of my own analysis. Initial auction is like which side the market is attempting to move initially. And then next one is talk about the POC acceptance at key reference level. What does that mean? POC acceptance means where the point of control is forming, where today's point of control is forming. Our price rejection around key reference level, are there any price rejection is happening? If any acceptance is happening, that is a high confidence. Rejection is happening, that is not a serious confidence. So what are the reference level to monitor for the confidence? There will be plenty of short-term reference level that we'll be monitoring. For sometimes short-term references, sometimes intraday references, we won't have to monitor as a part of the confidence. So first of all, what is initial auction? Initial auction talks about which direction the market moved during the start of the day. Price opened and then it started moving at letter A period or B period or C period. We need initial auction to estimate where the point of control is likely to develop. It also helps us to evaluate what are the odds that value area could be likely to build higher. What are the chances that value area likely to be built lower? It helps you to solve the market confidence indirectly. Initial auction helps you to solve the market confidence indirectly. So we can classify initial auction again into 3 categories. One is initial auction up, initial auction down, and initial auction center. Initial auction up, particularly when the early morning high, letter A period high is broken at B period or C period. So it looks something like this. Initial auction types, initial auction up is like letter A and B went up, or letter A went up, B and C also started moving up. C breaks the letter A period high, or letter B period breaks the letter A period high. Initial auction down is exact opposite of initial auction up. Initial auction down, B period breaks down, or C period breaks down the letter A period high. If any of those things are happening, then it helps us to assess the market confidence, where the price action is likely to rotate. We'll be able to gauge from that. Then we are having the 3rd category, initial auction center. Typically, letter A period high is also not broken. A period low is also not broken. Such kind of days we call as an initial auction center. So typically it will mostly result in a balancing structure. Mostly it's going to resulting in a balancing structure. Market might be finding a balance, more and more repeated rotations. Mostly option selling is what favored. Option buyers, it could be a tough time, or maybe if you're an option buyer, you have to position yourself as a scalper. Something like that is what one have to understand from the initial auction center. So why measuring this initial auction is very important? Because it is more connected to where the today's point of control is going to form. Right? Look at the last Friday's activity. I'll show you the initial auction. Initial auction was up. Initial auction was up, right? Why? Because letter A was there and B period went and break the letter A period high. Initial auction was up, but something really happened over here. Something had been changed. My view also bullish till B period. B period high went visual, and then it exactly stopped at letter K period. Notice that K period. Then something interesting, the C period done. C period broken the initial auction. So it is like letter A was like this. And then B period also went a little bit up and then dropped down. C period came back and broken down. This is what C period had done. So what C period had done here, I'm able to understand that this is not a trending market. This is going to be a balancing market where the price action is breaking the initial balance, initial auction. The initial auction letter B period got broken down. The one time framing itself, letter A and B, the auction got broken. It was an upside auction. Upside auction got broken down very faster. Faster they're going to broke down. Higher chances are like that is a zone, more and more rotations are likely to happen. More and more rotation. How many times rotation happened here? 10 times the rotation happened here. 10 times that particular price level repeatedly came again and again and again and again. And that is where exactly the point of control is also there. And that was a subtle clue for positioning yourself as a scalper or from an intraday trader. If you're an intraday trader, probably that this kind of day, you should not be in these markets. Or if you're a scalper, right, price goes down, you should be looking for an opportunity. Centering back, you should be looking for a centering odds. So I was mostly trying to trade the opposite side. Every time the price was going down further, I was looking for a long. Once again went down, look for a long. And then I look for a price move. I considered took an exit. Again, price started pulling back. I looking for a long. So I was mostly trying to trade the long. First half, throughout the day, I was trading longs. I mean, on the call side, mostly. Later on, second half, I have to switch it to the put option side. But what it makes me to see here is like I had seen this market as a balancing market, at least in the first half. More than 6 times of activity or 5 times of activity around that center. Right? That is why initial auction measuring is very, very important. It helps you to take control of your trades. So initial auction, you can see that if it is letter A, B, and C is going up, that is the initial auction up. It is breaking down. Possible point of control formation zone as the initial auction direction is broken. Faster the initial auction is going to get broken, faster the point of control is likely to get confirmed. Such kind of days have very high balancing odds. Yeah, maybe once in a while the point of control might be slightly missing. You might be expecting downside a little bit higher. It might form, but that is once in a while. But majority of the time, when the initial auction is getting broken faster, the high chances of price action getting balancing around that zone is going to be a most important one. Even in this case, you can see that letter A and B was going down. C period breaks up. C period, if it is breaking only like this, it's fine. But in this case, right, probably if this is like the case, then more and more rotations can happen over here. So maybe sometimes what happens when the rotation is coming to an end, the C period could do something like this crazy move. Maybe in that case, upper distribution could be a possibility in that case. Even though the ABC is coming to an end, the C period, when it's breaking out, it breaks really faster with the heavy highs, the heavy price action. Now that case, point of control might shift higher. That is a different case. right? But if ABC is also just like that breaking up and price is totally trading with lower volumes, more and more dull, boring price action, typically more rotation happen around that levels. So when more price action happens around that level, you know that you are dealing with a day with a very controlled opportunity. You cannot look for a bigger opportunity, bigger price action. Maybe even if it want to look into the bigger price action, second half, maybe you have to break the day into second half, and then second half, you have to look for a better trading opportunity. You have to check whether there is any possible odds of bigger opportunity setting up in the afternoon or not. First half is totally going to get into a balancing, else then. All right. So sometimes what happens, you could have seen that price will be one time framing in the first half. It will keep on one time framing. Then the breakdown happens. If that is going to be the breakdown, then you can see that maybe there's a high chance of point of control building above. Maybe that could be second half could be balancing. First half was mostly trendier. One of the rule that I do follow most of the time is like trying to not to fight against one time framing when the one time framing itself witnessing and the market is also going super strong. Or unless I'm not seeing any exhaustion in order flow or something like that, I don't blindly fight the one time framing. Now, what many people they do, they don't focus on this one time framing. And they think after this one time framing, oh, market become overbought. Now I'm going to sell it. That's what they think. But what they will miss here is like, here is where the one time framing is breaking. Here is where the odds of balancing could happen. They might be anticipating a trend, but market will be balancing. Again, that is something you have to go on yourself. You have to go back and validate whether whatever I'm saying is working or not. Because I personally myself, I've been following this for quite some time now. Since 2018, 18 and a half, since that time, I've been having this framework in place. Then one time framing down, similar odds. The one time framing where it is getting broken, that really matters. Now, some cases, right, in a trend day, we don't get that kind of break at all. It will be once break only once and still the one time framing resumes again. That's how a trend day happens, right? On a trend day, very rarely the one time framing broken only once. Now, such kind of day, we don't see any markets to come into balancing mode. Totally imbalanced mode is what occurs because every time frame would have been aligned on the same side. That is what it makes no room for balancing at all. All right, there's a small promo here before continuing the session. So Trades Law 5.0 is what one of our flagship program on market profile, order flow. It's kind of a fusion approach where we'll be combining discretionary trading with a systematic trading approach. Total 160 plus hours of live session is what we're going to focus on. Weekends we'll be having a theoretical sessions, and weekdays, morning 1 hour and afternoon 1 hour, we'll be spending total 60 trading sessions, which is like almost 3 months. We'll be practicing live training on Nifty, Bank Nifty analysis, stock analysis, hedging concepts, market microstructures, trading systems, trying to understand trading systems, learning to do some little bit of back testing, those kind of stuff. Right? That is what the core focus is, but 60% of the content is on market profile, 30% of the content is on order flow, and rest of the things are the other concepts. The core focus itself primarily on market profile and order flow. The reason is to make the traders understand and try to understand how the markets, how to handle the markets in a better manner. That is what the core idea is all about. All right, now getting back to the topic. So I want to talk a little bit about acceptance and rejection. What is an acceptance? What is a rejection? So in market profile, right, you would have hearing the term very often, price acceptance and price rejection. And acceptance is always a high confidence price action. Whenever acceptance is happening, sometimes when acceptance is happening, right, that indicates a potential change in trend at times. Whereas rejection is something different. Rejection is like a continuation of the previous day sentiment, most likely. If previous day sentiment is negative, today also the sentiment is going to be negative if there's any rejection. But acceptance is what it changes the trend. Sometimes a very powerful move starts with an acceptance. All right, so here, when it comes to acceptance and rejection, let's say I'm having an upper reference level, price is breaking. Look at the first example. Price is breaking the upper reference level and building point of control above the upper reference. That I'll call as an acceptance above the reference. Now, if it's a lower reference which I'm having, prices from the top, it is breaking down and building point of control. I'll say like point of control is accepting. I will say what price is accepting the lower reference. It is accepting because more trading activity is happening, more business is happening, more business, more engagement, more volumes are happening. That is one form of an acceptance. Means the change, whatever the change we've been talking about. At times, acceptance is always a trading opportunity. Rejection is also, but acceptance is so powerful in many cases. Talking about rejection is a more often a very short opportunity. You see the rejection, you can trade the rejection. Like for example, last Friday, we are witnessing a breakout failure. That breakout failure is a very short-term trading opportunity. It is not a positional opportunity as such, but it is a very short-term trading opportunity. See the rejection, yes, rejecting, price is rejecting the highs. That's how it turns out to be a breakout failure. And it starts moving to the other side. Right, so rejection is also a very important intraday opportunity. Most of the rejection opportunities are mostly intraday opportunities. Whereas acceptance are at times intraday opportunity also, at the same time positional trading opportunity also. So I give more importance to acceptance. And very few places I give more importance to rejections. It's not like only acceptance is powerful. Acceptance is powerful because not every time the market doesn't show its acceptance. Acceptance will be shown at very selected places. However, rejection happens at many price action levels. And at the same time, there are very few rejections or powerful rejections. But every acceptance or most of the acceptance are powerful acceptance. Because that is what it changes the game, changes the trend, in fact. So what level to monitor confidence? There are various levels. I do watch from an intraday perspective. I'll be watching rally highs, pullback lows, or early morning high and early morning low. Early morning high means at A period high, A period low is early morning low. Previous day high, previous day low, multi-day high, multi-day low. So whenever the price is nearing those levels, those are the reference level on how to monitor whether the acceptance is happening around those levels or rejection is happening around those levels. It is exactly that is the thinking which will be running in my mind. When last Friday it started, notice that one of my reference that I've been watching around is the previous day high. Previous day high. Notice that the level which I kept a reference over here. Previous day high is the reference. Why? Because that is the immediate reference. Price opened down below that. Price opened with an imbalance. Got back down. Again, get back at B period. B period exactly rejected. So B period was like a weaker reference, right? B period exactly went up. Just precisely one TPO up and then it started coming down. That is a very important rejection setup. When such kind of rejection is happening, you know that it's a weaker reference. Why it is weaker reference? Because visually traders are coming and shorting the markets here. Very visually they are shorting. How important it is? It is very important because sometimes if dominant sellers are coming and pushing the price down, they could be coming back once again. And that is the reason I was buying the dips and then trying to sell at the rise, because this confidence, such a visual, the reference levels are. And moreover, price action was going through the open multiple times. That is another clue that this market is going to be a balanced markets. C period low is breaking the initial auction direction is up. So initial auction direction on that particular day is up, right? Initial auction direction is up. And C period broken the initial auction. C period low broken the initial auction. And that is where the rotation itself likely to happen, right? That is where the rotation is likely to happen. But at the same time, price was attempting to drop and then pull back. Once again, later E period was going back up. So I again started trading longs because auction is again started going up. C period was down, that's fine. D period also went down, that's fine. E period once again started backing back up. F period, though it was breaking the low, once again it was backing to go up. So again, once again, I started trading longs again. But when the day high is done, I'm okay. I'm done with that highs. But all of a sudden, I was suddenly seeing that H period got quickly back up. How quickly back up? Maybe I'll show you. Here is the day high. Morning, the high. This is a high. B period high made its high over here, which is precisely at the previous day low. Now, when the high is broken out, you see that only 5 minute, only one 5-minute candle it had broken up, and then it made a top, and that's it. They reversed. This is something what we call as a breakout failure. Breakout failure is a very important intraday opportunity to trade towards the other side of the day. And yes, of course, if you have a very clear-cut understanding about the order flow, you can confidently go and take a trade very much faster, and you can look for an faster trading opportunity on the other side before anybody else thinks. So getting into the trade, one should have a fair idea about the reference level. One of the reference level I've been watching, as I said, like this is the highs, right? What I've been seeing here is like throughout the day, price started building down below that. So that tells me only two things here. One is sellers are serious on last Friday. Overall, this particular day, sellers are serious. However, the one who sold at B period, they are weaker hand sellers. They are weaker hand sellers because they are weaker visual sellers. So that means what? Selling is there. It's totally an entire move is like most of the selling activity is happening on the downside typically, but the day high is weaker. So there might be one chance, at least once, we might be seeing the day high test. So that is what I thought, like every up move, once again, every time the 30-minute bar is breaking on the higher side, I was also trying to trade on the long side mostly. So it was like price goes up, I took a long and then exit. Again, a pullback, I try to take a long and then I'll exit. Again, a pullback, I'll try to take a long. So this is how I've been, every move on the downside, I've been looking for a longer opportunity. Every time the price was breaking the highs, previous bar highs, I just kept on maintaining my longs. And finally, this high period breakdown, when I see that, I have to change my perception there. Right? But why I have to do this? Because at the same time, when I'm trading direction, I also aware that price is also balancing. So price always have the odds of coming back to the center. A center can be somewhere in this band. So every time the price is getting back to the band, it's a good long opportunity. Again, price is getting back to the band, long opportunity. Price is getting back to the band, long opportunity. So when you know that the price itself likely to center around, there are two ways you can trade. One is, if you know that if you're anticipating that this is going to be the center point, you can wait for the price to, every time the price action is coming into the band, you can expect a direction and you can trade. Price getting back to the center, you can trade. Coming back to the center, you can trade. Or what one can do is exact opposite also, it's possible. Price goes up, you can look for a trade towards center. Our price goes down, you can look for towards the center. Again, price goes up, look towards the center. Price goes down, look towards the center. This is kind of setup. This kind of setups one can play. right? So either way one can play. It's up to you how you want to organize the game here. It's more about screen time. It evolves into a screen time, looking into the volumes, looking into the flows, looking into the opportunities. That's what a rotational trading is, something very different and peculiar. At times, you may have to monitor some of the short-term references. Sometimes you may have a P-shape profile or a B-shape profile or a spike reference, double distribution, trend days, single print zones, prominent point of control, open rejection reverse. These are the places we do watch the confidence monitor as well. So as on last Friday, I can tell you this reference level, though the sellers came in, buyers showed first half, it is like totally sellers are in control, undoubtedly. But second half, buyers showed up. They rejected those levels. They rejected in the form of a breakout failure. That is one form of a rejection. So that is means what? Buyers showed up. They are not serious. So buyers showed up and they are not serious. They are not serious traders. Why? Because point of control itself building down below that. A rejection will be like point of control will be forming down below that. Price goes up and rejects and it gets back to the center. This is rejection. This is more of what? This is more of a rejection. Rejection is what? They're not so serious buyer. Who showed up? Buyer showed up. Are they weaker? Yes, they are weaker. Why they are weaker? Because there is no acceptance. If it is acceptance, right? If they are strong buyers, price would have went up and they would have done more activity above that level. And that doesn't happen. If that doesn't happen, that indicates only one thing here. Buyers are not serious. So it's a low buyer confidence. Mid of the day, the confidence was changing to low buyer confidence. So this particular day, what we can call it? It's a low buyer confidence. Low buyer confidence is an indication that buyers are not willing to accept, rather they are rejecting. You remember, right? We talked about the confidence types. Low buyer confidence. Buyers showed up, but they're not serious traders. That's what it translates to. Morning from the Orderflow, I was seeing some very good buying activity. In fact, late afternoon also, I had seen some very good buying activity, but above the highs or above the previous day lows, I'm not able to see any good buying activity happening around those levels. So that's one of the reasons I said like it's a low buyer confidence. Buyers showed up in the second half, but they're not serious. So obviously, if they're not serious, right, they are dumb money most of the time. It's right time to go and trade against them. That's what it means. So one thing you need to know about market confidence is like confidence need to be measured at every 30 minutes once during live market hours. It's something, it has to be like brought like a habit. And confidence can change in a day. Maybe morning we'll be seeing a high confidence selling. Second half we'll be seeing a low confidence buying. So confidence changes sometimes, right? The one which looks like a high confidence activity in the first half an hour immediately changes that it's no more a high confidence activity. So like that, the confidence can change in a day once with the 60 to 65% odds. Now, there are very few days markets start with a high confidence and maintains the high confidence, which are like very few days only. That also happened in Nifty. Last two trading sessions, like the Thursday and Wednesday trading activity, it started with a high confidence and it throughout the day, it maintained that high confidence. Notice that price opened, it went a little bit up and then it rejected and then it's a straight drive. And then a price action move, and then a price action move, and then a price action move. All these are a totally high confidence market. What did happen on 16th Jan is a totally a high confidence market. And what happened on this particular day also, notice that the price was one time frame. One time framing itself one form of a confidence. Letter A, B, C, D, E, F. More it is one time framing, better the odds of confidence are likely to be on the higher side. One time framing is one form of a confidence. Gap up is one form of a confidence. Right? So it is not only the initial auction alone. One time framing plays a major role. Confidence, it plays a major role with one time framing. Along with that, gaps also plays. If at all any gaps are there, that also one form of a high confidence markets. So here the price action itself dragged down one time framing. That one time framing itself, it's saying like it's a high confidence selling only. Point of control was totally forming down below the previous day low. That is also a signature of a high confidence market. Price was further breaking down. No rejection on that day yet. But then we had some last minute, some little pullback is what we had seen. And once again, what? Last Friday, price opened, gap down. Gap down is a high confidence markets. Price was trading down is a high confident market. But then buyers showed up and rejecting. That changes the game. That changes, like it is no more a high confidence selling, but rather it was a low confidence buying, which means what? Which is more or less the same thing only. Buyers are not serious. Morning sellers are serious. Later on, buyers showed up. The showed buyers are not serious. That means further one have to short the markets again. That's what it means. Kamal Kannan is saying like during market open interest for Nifty future was 9.76, but now it is showing us minus 3.6 plus. What does it mean? See, let me tell you, during market hours, if you're going to look into the open interest, that doesn't include the institutional open interest activity. Institutional open interest activity always arrives after the end of the market. So you're going to see definitely most of the days, you're going to see a deviation. So very few days you may not see the deviation, but majority of the days you're going to see the deviation. So if you ask me which one is you should use, one should use the open interest on end of the day basis. All right. So mostly it will be misleading if you're going to watch open interest during live markets. I don't watch open interest during live markets. All right. So confidence changes twice in a day. Sometimes morning there will be a confidence, afternoon there will be a confidence, again there will be a change in confidence. That will be like 10 to 15% of the time. But when you see that the market is holding with a high confidence, throughout the day high confidence is not changing, you should also align in the same direction which side the high confidence is lined up. Because most of the time trying to trade against the high confidence is totally dangerous. One of my cardinal rules is not to go with the high confidence unless you are having some strong odds, weaker references, or that the clustering is getting broken. Unless you're not seeing that kind of things, trading against high confidence is totally damageable thing. Many traders could easily lose their money if they don't realize that they're trading against the high confidence. Right? That if you want to know, if you want to evaluate high confidence, you should start practicing those high confidence in your daily trades. Somewhere you have to start with a pen and paper, and then slowly you have to start doing in your heads. After seeing some 6 months of practice or so, slowly you can start doing it in the heads. Straight away started doing it with the heads is not a recommended one. It will lead to often confusion because you need to have the habit of bringing on monitoring the every 30 minute once, measuring the market confidence. So there are times you will be seeing an inside day or no confidence day throughout the day, which is like 5 to 10% of the time. Price opens inside the range, trades inside the range. It doesn't break the highs also. It doesn't break yesterday's low also. Totally, it itself ended with an inside bar. Such kind of inside bars are totally a no confidence day. You have to come up with a controlled expectation, those kind of places. Because that is how the day is likely to turn into an inside day. Majority of the inside days are nothing but a low confidence, no confidence. Neither buyers are serious, neither sellers are serious. Still price will be balancing. Opening will be fluctuated multiple times back and forth. Low volume price actions. Those are the key ingredients of the inside day. Right, so such kind of days, only scalpers will make most of the money out of it. Intraday trades, hardly very few trades, very less opportunity for intraday players. And positional traders are not going to get anything out of it. So probably for a positional traders, they should stay away from the markets when such kind of price action is totally going on. What else? Oops. Yeah, inside bars are neither acceptance nor a rejection. Right, so there is one more important topic I would like to talk about. One is market profile and volume profile. Right, the one is market profile, which is more of a price action based price distribution. Next to that, we'll be seeing an histogram, which is nothing but the volume profile. In my case, I do give more importance to price based profile, which is like the market profile. Volume profile gives information, but market profile gives a maximum amount of information a trader needs. Volume profile will not throw very frequently the possible where the market could move. It only gives a structure. Yeah, some people, right? Sometimes people will be trying to trade that high volume nodes, low volume nodes. Generally, I don't trade the high volume nodes and low volume nodes. People who knows me, they know that I trade mostly. Most of my principles that I follow is mostly from the Jim Dalton's core principles, core ideologies. And then I don't look into the virgin price action, virgin point of control. I don't look into volume based point of control. Also, I don't look into that. I give more importance only to the price based point of control only. Now, many people question is like, why market profile? Why not volume profile? So the primary reason is like how the value is formed. With the repeated price action or a price into time, whenever there is a price into time, more volume also get generated most of the time. So obviously, if you want to get the price, fair price value, one have to use the market profile than to anticipate where the point of control is going to form. Only using a volume point of control will be very, very difficult to understand where maximum value or where more volume could be traded. So there are cases, right, when more volumes are traded in the volume profile, not necessarily it has to be the price-based point of control. Price-based point of control will be something different. So one of the primary reasons why I do use market profile than the volume profile is like, first thing is like market profile gives a maximum generated information, maximum market generated information that helps a trader, a short-term trader or an intraday trader to take a very fast trading decisions or better trading decisions. Volume profile also generates, but the market generated information from the volume profile is very, very minuscule compared to what the market profile does. Mahant is asking about gap up or gap down. Any relationship exist? Previous day, last hour session. Gap up or gap down? I don't think so. Like there are many times Monday sentiment, Friday sentiment got spilled into Monday sentiment. There are times Friday's global sentiment at times even reflects on the Monday's global sentiment also. In fact, that will be reflecting on Indian markets also momentarily, but that is a momentary thing. But no way you cannot say that because of Friday there will be a gap down. Because of the Friday there will be a gap up. You cannot pre-anticipate that. In fact, I never anticipated. On Friday closing, I thought like maybe it doesn't matter for me. Wherever the markets are going to close, I'm going to go neutral. That was my thought process on Friday. It's a totally I want to go neutral. I don't want to be in a fighting mode with the markets, weekends, holidays. So let's come back on Monday. Why not take a fresh start there? Anyways, either I have to buy it or I have to sell it. Let the market, let it open and let the market show to me. Why I have to be in a hurry to do all those things? My job is to do what? Collect the data points. Anyways, I'm not going to move the markets. I'm a retail trader like you and me. Like you people, I'm also a retail trader. I don't have the muscle power to move the markets. I can only collect the maximum possible information and I can only get prepared for the direction. Whichever the direction market goes, I do have only one choice. Go and trade in the direction of the markets. I cannot comment the market, right? Hey, market, you should come down only. I cannot comment the market. Maybe probably we can question the markets. We can collect the details about the markets. And we also try to do what the market is doing. That's what as a short-term trader one have to do. Juan Kumar is asking, what are the blue and red lines in MP charts? Okay, probably he's talking about these lines. So these lines are like how the point of control is migrating over a period of time. And this blue color line talks about the value area low, how it is migrating over a period of time, that particular day. And this is like value area high, how it is migrating over a period of time. Right, in a strong trending market, you can see that the point of control migrates down. That's kind of an institutional selling. Oops. See, one of the day, right, the point of control was like fiercely migrating down. Like throughout the day, it was migrating down. It's kind of a very strong price action. Sometimes even a wavy type selling would have been seen by the institutions. One of my comment was like this cutting kind of day, right? They went up, again it's selling, again went up, again a selling, went up, again a selling. So that is the kind of mode we had seen on 20th and 19th. These 2 days, my comments are like, we've been seeing an institutional selling pressure, which has been mounting in the last 2 days. Kind of a wavy type selling is what we can think of. Those kind of days is point of control migrates. Here also you can see the clear migration right from the start of the day. It's been migrating. So that kind of park migration itself says like kind of an institutional pressure is there. How an institutional selling will be like, they'll not be selling like this. This is not institutional selling. This is not. This is kind of a panic selling maybe, or this is maybe momentum selling. Institutional selling will be like when the price goes up, they will sell. Again, they'll do a wavy price action, they will sell. The wavy price action and then they will sell. Something like this. So that kind of days you'll be witnessing that the point of control will keep coming down. All right. Ranjit is saying, please tell Dalton 4 types of market view. 4 types of market view. Or probably you're talking about the normal structure, normal variation structure. We don't follow that anymore. Like it is a very old style. Even Dalton himself, he don't follow the very same thing. It's kind of a very basic structures. So it doesn't help on a day-to-day basis perspective. Yeah, it's good to learn those concepts, basics, but it hardly helps on a daily routine trades, right? It doesn't help much. All right, so let me pass here. I guess you learned something very new concepts in today's session. If yes, please go and do rate us, give your testimonials, because your testimonials is what it boosts us to make more such sessions in the upcoming days. And next week, very interesting session is lined up. Don't miss it out. It's once you signed up, you can still attend the same using the same URL. You can go back and attend those sessions. So let me pass here and see you next week, same time, with more interesting market profile concepts. Thank you. Gaurav is saying, join so late, can we get the recording? Obviously, recording will be automatically posted. You don't even need to ask me. I think by another 2 or 3 hours from here, same place, you just go and log in. You'll be able to directly access the recordings. All right. Thank you.